catch up. So Jacob and I are going to have a quick chat about business and setting up for growth, mainly in the small business space, and just any, I guess the purpose of this is to have like a top 5 questions that are going through your head around your business, Jacob, and then we'll keep obviously the conversation at a relatively high level, so it can be translated to other industries, but then obviously we can get into specifics where need be.
Okay, we won't. I won't say too much about my business then.
Yeah,
Just enough.
Just enough to give people an idea. Okay, perfect.
Exactly.
Okay, so shoot, do you want to just kickstart it?
So the topic is set your business up for growth, right?
Yeah.
Yeah.
That's it.
Good. I've divided it into like 5 sections, 5 questions, and we'll keep it within the half an hour still, so we won't go into too much detail.
Yeah, no, exactly.
Yeah, great. So, how I thought I'd start. Well, you know what I am. I'm a service business.
Yep.
Marketing. Obviously, you're one of my clients.
Yeah, exactly right.
Yeah, and so in terms of that, it's a bit more difficult to understand my financial position because it's very fluid. My business, it's not very what's the term? It's not tangible.
Yeah. And service industries are a little bit like that. It's a little bit harder when you compare your type of business and even my type of business to a straight restaurant or a straight retail store where you have a product, you sell it in the market, and then you've got a price attached to it, which is very simple, right? In that in that space. I guess with your type of business though, it is from a financial position, it is really important just to be disciplined in your P&L management and understanding your customers. And so with within do you use MYOB or Xero, or what are you using at the moment?
Xero.
You're using Xero. So within Xero, you can pull do you use your software quite detailed, or are you fairly high level with it?
I'm probably high level with it. I reckon I could have a better understanding of it. That's probably something that I need to probably do some short courses in or get some assistance with it as well, because I don't think I maximize off it for sure.
Yeah, okay.
Yeah.
Because I think it's garbage in, garbage out when it comes down to it with the systems. So depending on how much information you're putting into Xero will allow you to get the information out of Xero, like in a P&L. So if you're not inputting, for example, all your customers' information, all your expenses, your car expenses, your office expenses, your marketing expenses, accounting, anything, printing, everything, if you're not factoring that or inputting that line by line within Xero, what you print out in the report is not going to be as clear as if you were, which obviously makes sense to you, right? But I think for a service business, I guess the key things that you need to be looking at are your customers and your customer contracts to understand when your money's coming in, when your money's going out. So you need to know what is your break-even point. So you need to understand what are your fixed costs, what are your variable costs, and we kind of briefly spoke about this last time, but your fixed cost, variable costs, but then also understand your customer contracts and what's coming in and what's going out. Yeah, you're lucky in the sense that given it's a service industry, your working capital isn't as big, so you're not having to buy a lot of stock. You're getting paid by a client, and when a client pays you, you're using part of those funds to pay for other stuff. Yeah. If we do some sort of marketing, even for me with you, if we do some marketing, it's your fee is X, and then we add on $100 worth of marketing. So it's an add-on cost. It's not coming out of your fee per se. Yeah. So because of that, you don't have to worry about that sort of expense and working capital. However, you need to understand, for example, now you've got an office that you rent out. So you pay X dollars a month in your office rent. You need to make sure that when your rent's due, you collect your money from your clients as well.
That's true. More costs involved.
And now the costs give you that discipline, because you can't obviously just be relaxed about how that works.
No. So now I'm being a bit more cautious about the whole contract thing that you're talking about.
Yeah.
Before that, I was not really paying attention to it.
Yeah, it theoretically didn't really matter, right?
No.
Because if a client came, If it didn't. You didn't really have a heavy amount of fixed costs.
No. But now it's starting to be a bit more important. Yeah.
Exactly.
And I
So
have
you need
to
to
pay more attention to it. Yeah.
And that's where, as your business, as a service business plays out, you need to think about how your contract works, whether you want to be going on a month to month, or whether you want to be locking people in for 3 months or 6 months or 12 months to give you some certainty in cash flow. So for example, if you were charging $100 for a month, you may charge them $90 a month if they committed to 6 months or 12 months or something like that, because you know now if they've committed to 6 or 12 months, you've got that cash flow coming in.
Yeah.
It really comes down to that financial discipline. And now that you know you're paying rent for 6 months or 12 months, you know you've got that cost regardless. So you need to make sure you lock in certain clients to make sure that you can cover your costs.
Exactly.
So it's that financial discipline, and that's where the input and the use of things like Xero, if you use it well, can be your best friend.
Yeah, I think that it's important also that we got to be really on top of it from the beginning. That's
100%.
something that I'm learning.
100%.
Yeah. All right. So let's go on to the questions and be a bit more
structured,
okay. So I don't go too detailed with my business. So how can I get an understanding of my financial position? We're talking about that now at this point of my business, and how do I set myself up for growth? So I'm already established. I've been around for years now. Yep. So how would I be able to be like, okay, now I need to, because I'll be honest with you, it's been ad hoc mainly over the last few years, but now that it's growing, I have to take it more seriously, like we were talking about now that I've got my own office space as an example. So how do I understand my financial, like how do I get that? How do I understand my financial position as a business, and how do I set myself up for growth?
Yeah. So I think what you need to do is you need to start having that discipline of inputting into Xero and using the software correctly in order to be able to monitor your income and your expenses through there. And then you need a structured process to monitor your financials. Most corporates and most big organizations run monthly financial reports, right? So they run these monthly, quarterly, semi-annually, and annually so that they're constantly across what their numbers are looking like. So you need to, so basically by running these reports and monitoring your financial position through your P&L or through your P&L and your cash flow, you can see how you're traveling as a business and then position yourself in order to know when you're ready to grow, when you're ready to invest. Because then you will have set, and we'll talk about this a little bit later, I'm sure, is around your goals. But as you set your goals, one of your goals would have been, I want to hit $100 in revenue, or $1,000 in revenue, or $10,000 in revenue, or $20,000 in revenue. And then if you're hitting those goals, then you know, okay, when I get to $10,000, that's when I'm ready for the next stage. I'm ready to bring on another staff member. Like when I'm ready, like you need these mini goals and mini milestones, both financial and non-financial, to know when your next position kicks in. But from a financial perspective, it's your P&L, it's your budget, it's your customer contracts, payment terms and customer contracts, and general working capital. But working capital is not as big for you. They're the big points to kind of keep your eyes on.
Okay, true. So I would have to I have to actually create a contract for my business. I haven't got that yet.
There you go. Yeah.
Yeah, that's perfect. And then I'd have to have a better understanding of Xero. So you would say probably I would go to someone who understands it, who's able to explain
you could sit if you sat down with your accountant and you sat down with the accountant over a coffee, they could explain to you the basics of it. They could give you a quick tutorial. And because it'll make their job easier as well, right? If you're inputting stuff into Xero effectively, when he does your tax returns, we know that he knows that the information is clean. Otherwise, he's using Excel, and there's a flow-on effect.
Okay.
So it's just about having that discipline.
Okay, cool. And do you also need to have like a forecast as well? Do you reckon?
Forecasts for small business, you should have an idea. I think forecasts are a little bit wishy-washy, but I wouldn't necessarily build a financial forecast in the detail form. I would look at a financial forecast in a holistic form, in a strategic form, to see where you want to take your business. Because you can make your forecast whatever you want it to be, right?
Yeah.
But you need what's more important in my eyes are those financial and non-financial goals and your strategic direction for your business. Where do you want to take your business? That's actually more important.
Cool. And but you were saying also looking at reports, your financial reports like monthly, that would probably help you anyway.
Yeah.
So that would be like being on top of it completely would like you wouldn't like the whole forecasting wouldn't be as necessary if you're already on top of it on the day-to-day basis.
You just have to be across your numbers. Like the best guys that run their business are across their numbers. So you just need to know what your numbers look like, your revenue numbers, your profit numbers, your cost numbers, your margins. You need to know these things. And then it won't become every month I need to sit there for 3 hours and go through it. You're constantly across it. And then it just becomes a formality of just getting things churned through.
Okay, cool. So, so we were speaking about also the cash flow, an idea of predictive cash flow. I was told that recently. That's similar to also the contract, isn't it? Having contracts will also be able to give you an idea of exactly how much you're going to be making in the next
Exactly
few months.
Exactly right. Because your business is client-based and service-based. Yeah. By having these contracts, you can normalize and streamline your cash flow. So you're collecting $1,000 or $2,000 or $10,000 a month through constant contracts. And then when you know that, you can predict how much is coming through, and you can get comfortable with that level.
Yeah.
So that's where your customer contracts become important. And that's why I was saying to you just before about whether you want to have 1 month, 3 month, 6 month, 9 month, 12-month contracts and price them accordingly, because you may have 50 clients all on month-to-month contracts, but then they could all drop off tomorrow.
Yeah.
But if you had 20 clients on month-to-month, but 30 clients on 6-month contracts, and you give them a little bit of a discount, then you've got certainty. You've got them for 6 months, which is actually more important to you.
True.
So
Okay.
that's something to keep an eye on.
All right, cool. So then the points are have an accurate accounting system in Xero. Make sure everything is as detailed as possible and as accurate as possible. Having a budget and making sure that you are across your reporting, finance reporting on a monthly basis probably. And making sure that you have long-term or short-term contracts with your clients.
Yeah, some kind of contracts. Yeah, exactly right.
Excellent. All right, so let's look at the second one. Are there any quick benchmarks that I can look at for my expenses? So sometimes I think, all right, I'm spending this on this, I'm spending these, this is my costs. Am I making enough money in comparison to that? Because I can't really compare it. I don't know how to compare it to anyone else because it's like you said, it's good that you say that, look at it in your own perspective through your own business and see how you're going specifically for yourself. Because I don't know if I can really, is there a benchmark for my,
there's no, I'm sure there is a specific benchmark. I'm sure there are benchmarks that you can use in your industry. I think that every industry has their own views. The way we look at it is, we normally break it into 4 areas. So you break it into cost of goods, salaries and wages, general business expenses, and profit margin. So when you break it up into those sorts of components, and then we say you've got 30% allocated to cost of goods, just as a ballpark, right? And in your industry, you don't really have a high level of cost of goods, or your cost of goods could actually be your staff, because they're the people that are actually, that's the product that you're selling. It's you, right? You're the cost of goods, right? Theoretically. So when you look at it and you say cost of goods is 30%, salaries and wages is 30%, you go, you want to be generating a 15 to 20% margin. Otherwise, why are you doing this? And then you say it's about a 20% business expenses. You theoretically got 50 to 60% is your cost of goods and your wages, and about 20% is business expenses like rent and other marketing costs, admin, that sort of stuff. And then you got a 15 to 20% margin. That would be something that I would keep in my eyes, in the back of my head, around how you'd want to run it. And if you have it like that, then you know that you're roughly in line.
Okay.
Does that help?
Yep. Can you also, obviously, I'll be able to look at that in Xero as well.
Yeah. So this goes down to the level of detail you plug into Xero. And it's something we can sit down and go through, but when you plug the information to Xero, you'll be able to allocate your expenses, your cost of goods and your wages. In your case, you may not have any cost of goods, right? So it'll be salaries, wages, general business expenses and profit margin. It'll just be 3 areas.
Yeah.
So you may say, I'm happy for wages to be 50%. I'm happy for business expenses to be 30 to 35%. And I'm happy for profit margin to be 15 to 20%. And there's your benchmark, and then you can run your reports and go, yep, my business expenses are sitting between 30 and 35%. I'm happy. My wages are softly 50%. I'm happy, and I'm still making margin. And then that's how you can, and that's just a ballpark number, ballpark benchmark, but it gives you that ability to have a look at that and keep an eye on those margins.
Okay, so in terms of services, would you be sitting with your client and talking to them about things like this?
Yeah. So we would, like, depending on who your accountant is, we'd maybe sit down with your accountant to get that information clean. But what we would do is we'd work with you on that information. We'd pull your P&L and we'd work with you on your P&L to make sure it's accurate and it's structured in a way that you can set yourself up. That's where we come in. It's the interpretation and the growth from it.
Okay, great. Excellent. All right, let's keep going.
Yeah.
That's the second point. We've got a few more to go in only 10 minutes. So is it important to have written down we're speaking about short-term and long-term goals. Let's talk about that. Do you sit through with us, like in terms of the business consulting and talking discussing short-term and long-term goals for the business?
Yeah, so part about when we've sat down with clients around the consultation around the first stage of the small business consulting is we sit down and work with you around what those goals need to look like. So what is a short-term goal? Like, depending on the stage of business, it could be, short-term could be 3 months, short-term could be 6 months. So 6 months, it could be 6 months. But for example, if it's long-term, could be 12 months or greater, right? It's one of those things that depending on the stage of business. But the other thing that on goals, we need to make sure that they're smart goals, they're specific, they're measurable, they're actionable, they're realistic, and they're timely. So we want to make sure that you set your goals correctly in a timely manner and structured correctly. So we work with you on that. And then the importance of these goals are to set yourself up for growth. We need to understand
how many short-term goals and long-term goals should we have?
Yeah, I normally aim for like 3 to 5 of each. You don't want 20 because it's just too hard to do and too hard to manage. You want about 3 to 5 focused goals.
Okay, so short-term 3 to 5 within 12 months probably.
Yep.
Long-term more over 12 months.
Over 12 months. Yeah, 3 to 5.
Okay, great.
That's usually a number. And then it also comes into play around when you try to get investors or you're trying to grow your business, having those goals and milestones and having that vision clear will help you. It will help you get those guys on board.
Yeah.
Okay,
so, yep, and you were saying that smart, so specific, measurable.
Yep, actionable. Realistic.
Or attainable, some people say.
Or attainable, yeah.
Yeah.
And so it's actionable, realistic, and timely, or attainable, realistic, and timely.
Okay, great. And okay, cool. All right. So you sit with, you would be able to sit with me and help me out. Working that out as well.
100%.
Excellent. Very good. Okay, good. All right. Let's look at the next one. So when should I invest? Okay, that's a strange question. When should I invest in my business? I mean, when should I put more money into my business? That's what I'm trying to say.
Yeah, so
when do I know?
So investment's an interesting thing, right? So you have to be objective when it comes to these sorts of things. So when would you invest in shares? When would you invest in a third party investment? Is when you can see the return coming through, right? Yeah. That's the obvious answer. So when it comes to your own business, you need to be objective about that. So if you've got an opportunity to invest $50,000 into your business, my first question to you is, what is that $50,000 going to do? And how are you going to generate that return? Otherwise, you can take that $50,000 and invest it somewhere else and just continue working your business. So you need to be continuously investing time and money in your business and reinvesting in your business to see the upside. But this is where your goals and your milestones come into play, because you can start to see what that money is and what it's doing for your business. In terms of timing of that, it's, there's no right answer. Like, you could invest in day 2, you could invest in day 202. But it's one of those things where you need
obviously
to...
the more specific the more you know where you're going and where you're at, the better chances you are at making better decisions in terms
exactly
of
right.
investing.
Because, like, for example, Jacob, if you came back and said there's another social media business that's for sale, that's on the, in Victoria, and you said, I wanted to buy them, I want to integrate them into my business and grow, that could come on day 2 of you running your business, and that could be a great opportunity. So you just need to see you need to be able to know what that money is being used for, and then that's how you invest in it. You just got to remain objective when it comes to that sort of things.
Okay, and you must have come across a lot of businesses that have failed to do that. Obviously, invested and they've gone down. What's the biggest mistake you think that they've had?
It's actually the biggest mistake is more the other way. It's actually blindly investing. So rather than investing in just not investing in their business, a lot of people blindly invest in their business. And so they're throwing more money at something, but they don't know what the purpose is and what they're looking to achieve from that spend.
Yeah.
So if you're disciplined in that way, that's actually been what I've seen for clients. That's actually been the harder part, not so much the not investing in their business.
Yeah. Okay. Discipline is very important.
Discipline
I feel that
is critical.
is more important than skills, even. It's strange, honestly.
I know what you mean.
I'm always saying that.
Discipline is important. And objectivity and discipline, isn't it? Yeah, it is about that. 100%.
Yeah. Okay, cool. All right, excellent. And let's look at the last one. This is probably a personal question because now I'm a sole trader. I've been a sole trader for the last few years. And then I was told by my accountant I should change and become a company. And I just want to know, what is the difference and what are your thoughts of that? He says it's better in terms of liability and things like that. To be a company, and especially now that I'm growing, and which makes sense, and that's probably what we're going to be doing. But what's the difference between the two?
So the sole trader it's a high risk, all your personal assets are exposed, but it's low cost. I think you can set up a sole trader for nothing, right? So you can basically be online tomorrow. However, the reporting requirements are pretty simple, low compliance and high risk and low cost. That's the sole trader model. Most small businesses start off as a sole trader because you don't actually know what your business is going to do. So until you know it's going to survive and survive the test of time and go, you don't really want to invest thousands of dollars on setting up a company structure and the accounting and reporting and compliance, etc., if you don't need to. Versus when you set up a PTO Ltd, like a company, you've limited your risk to the assets in that company, which is a big benefit for you, right? But then, as you know, that comes with ASIC fees. It comes with accounting requirements and accounting fees and compliance and reporting and all these sorts of things, which may cost you. It could be a couple of $1,000s a year, or $1,000 to $2,000 a year, in addition to your thing. So, as a small business, in your first year, if you generate $10,000, you don't really want to be spending $2,000 on accounting.
No.
So this is one of those things. So that's why most businesses start off with as a sole trader, and they play it out over the next year or two, and then they convert. The important, and I think what your accountant is talking to is actually important, because the important is as you get to a stage where your business is about to go to the next level, and bring on new clients, and get to from maybe 5 to 10 clients, or 20 clients, or 30 clients, then you're getting exposed. So now you're like, you know what, I'm going to bring on more staff. I'm going to take on more clients. I'm going to take on more risk. I'm going to take on more expenses. I need to set this up properly. And I need to make sure my personal assets are secure and safe, and I want to do this now. So you need to give it maybe 12 months, depending, 12 to 2 years. Once you've got that done, then you can go and set up the right structure, because you also may find a family trust structure is the right thing. It may not be a company, but once you've run your business for 12 months or 2 years and you start to generate that revenue, then you can have those conversations with your advisor and your accountant to say, well, okay, now this is my business. What is the right structure for me? And then you can go from there.
Good. Well, that's the stage that I'm at right now. So yeah,
it's a good stage. It is a good stage to be in. It means that things are going right. Things are going in the right direction. Things are going correctly.
It is. It's scary though. It's scary. It is, because you know, sometimes you come into a business with a passion and a drive for what you do, but then you realize that later on, that's part, like that's like a little percentage of your business.
Small.
Now you have to.
100%.
Yeah.
It is one of those things where it's the stage of the business comes, right? You just need to be prepared for that, and be open to it, and the importance of having people around you to have those conversations is critical, because you get caught, a lot of the business owners, they get caught up in their business, right? So, and they're doing a really good job, and they're good at what they do, and that's why the business is successful. But having independent people around you as advisors, accountants, friends, family, whoever it is, they can give you that advice to come in and say, you know what, maybe now's the time to think through what is the next stage of your business. Should it be set up differently from a structure point of view? Should you be investing in your business? Should you be merging with another business? What should you be doing now to take it to the next level? Like, you could have 2 jobs, 3 jobs. When's the time to, go all in? It's a big question, right? When do you do that? Do you do that? Is that the purpose? Is that what you want to do? So all of these questions will go through your head before you can go to the next stage.
Very true. That is going through my head right now.
There we go.
Doing a few jobs at once, and sometimes you're just like, when should I stop, and then just focus on the one thing.
Yeah, exactly right.
Exactly. But it's true, and that's another point that we never spoke about. But you need to surround yourself with the right people as well.
100%. and I think that's actually it's a really important point, especially with small business, because you don't necessarily have the teams of a large corporate. It's just you, maybe 1 or 2 other people.
Yeah.
So it's really important that not only you surround yourself with advisors or accountants or friends and family, you surround yourself with other business owners, other entrepreneurs, other business owners, and join networking groups and clubs and things like that, because you can just leverage off those relationships and those experiences, because what you're going through now, someone else has gone through, right? 100%. So how do you leverage those is actually critical.
Yeah, 100%. And I've got a lot of pride as well. So you telling me that, no, seriously, and I think that I've learned that I have to be a bit more humble, and I have to listen to a lot more people who have a lot more experience than me, like what you said, that have gone through now.
Yeah. And there's nothing negative about that, right? The more you can learn of other people's mistakes, the better it is. Yeah. Right? Other people's wins, other people's losses, just learn. And that learning experience is just amazing.
Exactly. So excellent.
That was done. That was fun. It was a little bit different, but that was good.
It was different. So we went through this chat was set your business up for growth, and we went through the 5 points. How can I understand my financial position? Quick benchmarks that I can look at for my expenses. We went through that. Is it important to have written down short-term and long-term goals, which it is? When should I invest in my business? Being accurate and having an accurate understanding of where you're at and where you're going is when that's how you know when you should invest, and the difference between sole trader and the different
structures.
Yeah,
exactly right.
And so basically, this is why we spoke about this, is because this is something you do offer, but you're going to be creating business package as well, I think.
Yeah, so we're going to create a business. Well, we've been speaking to a lot of people, and we've seen some interest in getting some kind of support, some support packages. So with some templates, as well as some one-on-one FaceTime and interviews, and model building and things like that. So we're trying to come up with a little bit of a package, a couple of different options where small businesses can get on board, and we can provide that support framework as well as some kind of advisory capacity which is more affordable for small business. So we'll hopefully come up with that and launch that in the next week or so.
Yeah, we're working on it. We're working on the marketing, so it's exciting.
Perfect. So we're looking forward to releasing it, and hopefully we'll get a good take up.
Exciting. Thanks, Aj. Thank you so much.
Thanks, Jacob.
Tonight.
Appreciate it. Thanks a lot, Jacob.
No worries. We'll be putting this on IGTV, everyone, in case you want to rewatch it.
Thanks a lot. Thanks for joining, everybody, and we'll speak soon. Thanks, guys. Cheers.
Good night. Ciao.
Good night.